hello traders, hello YouTube. This is Juicy Forex Mentorship. I want to specially welcome you to my YouTube channel. If you're a new subscriber and if you're an old subscriber, I also welcome you back to the YouTube channel. Please do not forget to like, comment, share this video, and subscribe if you haven't already. So in today's video, we are going to be talking about Forex trading for beginners. What exactly comes to our mind when we hear Forex trading or when someone tells us about Forex trading? Now, Forex trading is commonly called foreign exchange trade or FX. Okay, this is the global market for exchanging foreign currencies. Forex is the largest market in the world, and the trades that happen in it affect everything from the price of clothing imported from China to the amount you pay for vacation. So if you are traveling outside your country, if you travel from your country to another country, you are expected to exchange the local currency you are coming in with to the currency they actually spend in that country. Okay, now if you have done that, you have simply engaged in foreign exchange trade. Okay, because forex is the exchange of foreign currencies. So if as a Nigerian I travel to United States of America, I won't be allowed to spend naira in the United States of America. For me to do anything, I have to exchange my naira to the US dollar they spend in the United States of America. That is simply foreign exchange trade. Now, if you travel outside your country as well for vacation and you have bills to pay, you have hotel bills to pay, you need to buy stuffs, you will not be allowed or permitted to pay your bills with your local currency. Depending on the country you're coming from anyways, but you will not be allowed to spend your local currency in that particular country. You have to exchange your local currency for the currency they spend in that country. That is simply foreign exchange trade. Okay, now, how are currencies traded? All currencies are assigned to a three-letter code, much like a stock market ticker symbol. While there are more than 170 currencies worldwide, the US dollar is involved in vast majority of forex trading. So it is especially helpful to know its code. Okay, now the second most popular currency in the forex market is the euro. The currency is accepted in 19 countries in the European Union and the code is AUR, while the US dollar is USD. Okay, now other major currencies in order of popularity are the Japanese yen, which is the JPY, the British pounds, which is the GBP, the Australian dollar, which is AUD, the Canadian dollar, which is CAD, and the Swiss franc, which is CHF, and also the New Zealand dollar, which is NZD. All forex trading is expressed as a combination of two currencies being exchanged. Remember, for exchange to occur, you need two things. You need the commodity A and commodity B. Okay, you can't exchange one currency for itself. You need two currencies to come in place for exchange to occur. All right. Now, how forex trades are quoted. Each currency pairs represents the current exchange rate for the two currencies. Here is how to interpret the information. Using Euro USD or the Euro to dollar exchange rate as an example, the currency on the left is the Euro, which is the base currency. EUR/USD. EUR is the base currency because it's at the left, okay, and the USD is the quote currency because it's at the right. So in a nutshell, when you have euro slash US dollar, which is EUR slash USD, EUR that is at the left hand side is the base currency, while the USD at the right hand side is the quote currency. Okay, now the exchange rate represents how much of quote currency is needed to buy 1 unit of the base currency. Okay, now if the euro USD exchange rate is 1.2, that means 1 euro will buy $1.20. All right, if the euro USD exchange rate is 1.2 at a particular time, that means 1 euro will buy 1.2 $1.20. Or put it the other way around, it will cost $1.20 to buy 1 euro. Okay, now when the exchange rate rises, that means the base currency, the one at the left, has risen in value relative to the quote currency. Because why? 1 euro will buy more USD. Note, 1 euro will buy more USD if the base currency is rising, and conversely, if the exchange rate falls, that means the base currency has fallen in value. Okay, now the next one in the slide, which says forex terms to know. Every market has its own language. These are the words to know before engaging in forex trading. Okay, just like every other markets we have around the world, they have their own simple language. Okay, so now the first language here in the forex market is currency pairs, which I just explained. All currency trades involve currency pair, or all forex trade involves currency pair. In addition to the majors, there are also less common trade like the exotic, which are currencies of developing country. Okay, now remember I said the forex market is a market where you exchange currencies in pairs. In pairs means for you to exchange, you need two things involved. Okay, so you need commodity A or currency A to be exchanged for currency B. That is currency pair. Now PIP, short for percentage in profit. A P refers to the smallest possible price change in a currency pair because prices are quoted out to at least 4 decimal places. A pip is equal to 0.0001. Now, in the next video we're going to be dropping, we'll be explaining in detail what pip means on a proper live chart. Okay, but have in mind that pip is simply percentage in profit. Okay, a pip refers to the smallest possible price change within a currency pair. So it's pip we use in calculating price changes in the forex market. And how do you identify pip? Now, your pip is the fourth number after your decimal point. So if you have 0.0001, the one there is your pip. All right, now bid and ask price. As with other assets like stock, exchange rates are determined by the maximum amounts that buyers are willing to pay for a currency, which is the bid, and the minimum amount that seller requires to sell the currency, which is the ask price. Okay, so now bid simply means the buy price, and the seller's price is also the ask price. Okay, don't get it twisted or mixed up. Now the difference between these two amounts and the value trades ultimately get executed is the bid ask price. So now the difference between the bid price and the ask price is what we call the spread. All right, now the next one on the slide is lot size. Forex is traded by what's known as a lot, or standardized unit of currency. The typical lot size is 1000 units of currency, though there are other micro which are 1000 and mini lot size. All right, so in the next video we'll explain and I'll show you the types of lot sizes we have in details. All right, so now lot size is what you use to calculate your profit in respect to the pips you catch in the forex market. So if you catch 10 pips, you don't know how much it's going to give you in currency form, right? But now your lot size will actually determine how much you make with your pip. All right, so now leverage. Because of those large lot sizes, there are traders, some traders may not be willing to put up some money to execute a trade. Right, now let me simply explain this in plain English. Now, before now, individuals could not trade the forex market because you need large volume to actually trade, large volume of currency or money to actually trade the forex market. But now, with the help of leverage is simply a virtual loan that your broker gives to you to actually make your money look big in the forex market, or to actually help you magnify your money and make it look big in the forex market, so you can place good positions or large positions like others that are actually coming into the forex market with a real big money. All right, so leverage is simply a way of your broker borrowing you money to make your initial capital or your capital actually very large in the forex market. All right, so you can place better positions. All right, now margin. Trading with leverage isn't free. However, traders must put down some money upfront as a deposit, or what's known as margin. Now, margin is simply your initial deposit for every position. Okay, so if you open any position on your MT4 or your trade, margin is the initial deposit charged on every position. So if you enter multiple positions on your trade, you are simply paying initial deposit for every position you open. All right. So these are the simple and common terms we use in the forex market. As time goes on, you get familiar with them, and would explain more in details, and we'll go more in depth. All right. So I hope this video has actually helped someone. Please let's know in the comment section if this video was actually helpful, and if there's any way you need us to, or any topic you need us to treat before we go to the live chat or trading view. All right, thank you very much guys, and I hope to see you again in the next video.